Monday, October 20th. Well, we did get a recovery rally, at least for a couple of days, Thursday and Friday. Dow Jones was up by 263, Nasdaq up 41, S&P up 24, but the Russell ended up being down on the day, $3.79, and that was again the weakest index of the five that we follow. And basically, it was a gap up, and pretty much the markets stood at elevated levels. The other three indexes, aside from the Russell, kind of gave back half of its gains, but nonetheless, it's green, so it's not a bad thing. We'll take a look at that on the chart. But the Russell is still very disturbing because we actually sold off on the Russell pretty much all day. Once it plateaued in the morning, we had just really a downtrend established all day, and that's not good. That's not what you want to see with the Russell 2000 again, and I think that's one of the culprits that brought the rest of the indexes down. This extreme weakness in the small cap sector. So we got to pay attention to it. It's actually very, very important because it's a good gauge of risk. It's good sentiment, investor sentiment, how they're feeling. So if they're feeling good, they want to take on more risk, they buy the Russell. Or, again, small caps. So let's just keep an eye on that. Okay, so in front of you, we have the bonds, a 30-year, the ZB. And if you recall, months back, I had mentioned, let me just bring this chart back in here. We had that inverted head and shoulders that I established way back in, I think it was maybe early on in the year. But nonetheless, we had our extensions, and we hit our one extension, and I said that 1618 is going to probably hit the 140.22. Well, looking at it now, we've actually got really close to the 2618 extension. So bond money continues to go into bonds, and I always say that bonds are the smartest guys in the room. And just taking a look at the commitment of trader reports, we have the retail crowd heavily short bonds. It has let up a little bit, but that's telling me that also that we're going into a big short squeeze. And remember, when investors are nervous, they park their money somewhere until volatility subsides, and that's going to be bonds, and of course utilities and healthcare for one, and consumer staples. So you got to watch that. And this is telling me that this is nowhere near going down. Would I buy it up in these areas? No, probably not. This is really the spot where you wanted to buy it if you were able to in following bonds. But this is something that right now would be just be an add-on to my analysis on where equities is headed. Okay, let's take a look at the dollar. Again, dollar's going to hurt a lot of the multinationals. This is a big resistance area. This is the weekly chart. And as you can see here, all we're doing is just flagging into the 8. And even if we broke down a little bit more and came back well into here, I think the dollar has a long way to go. And I think the dollar has now totally reversed this downtrend from all of 2014 and now is headed higher. So these multinationals are going to get hurt pretty hard. And we are in the middle of earnings season now, so we have a big week of earnings coming. So make sure you check the earnings calendar. They're not holding anything. And watch some of these multinationals and see. Let's see where this market is headed. If we can get through earnings season with maybe some volatility, and then at the end of the month here, put some sort of a base in, and then maybe next month and then going into December we get that Santa Claus rally. But right now it's too early to tell. Let's take a look at the ES. As you can see here, we hit our 1618 extension. RSI finally, from oversold levels, started to pop. But look what's happening here. We have no volume on the upside. That is not good. Remember, we want to watch the retracement rally, because if it is truly a retracement and now turned into a full-fledged uptrend, we're going to see volume. We don't have volume yet. So to me, this is just creating some sort of a bear flag into resistance, which probably will be sold into at least one more time. Okay, and that's what I'm suspecting. I'm suspecting the markets pop even today, if we can get a good pop today, into these resistance areas, like I pointed out on Friday, and then start to roll over. Now, that does not have to happen, right? We can pop into today, maybe tag the 20, and then Tuesday come and just continue to move higher, and then create some sort of a base. So that's something that we're going to watch. But watching that volume right now is not encouraging. Okay, here's the 4-hour chart. We're back into this small downtrend channel, but again, we have downside targets that were met, and now I'm looking for this 1920 area in the ES for failure. Okay, that's where I'm looking for. And then, of course, if we do fail, we have to see where we go from there. But again, we do have our downside targets that were met and are still intact. diamonds. Again, two-day move big, not bad for a reversal. Again, back on Wednesday, then Thursday we took it right back, and then Friday. But look at the volume. Volume is just very light on this uptrend. Not looking too great. Transports, same thing. Look at the volume. Now the transports actually had a bigger bounce than a lot of the other indices, which is the leader, which is fine. But we're underneath the 20-day moving average now. So if we pop back up, I think this 148, 150 area is going to be a real good spot to start selling if we see the transport start to roll over again. Remember, I like to see everything in sync here. Sometimes you don't get it, but when you see something like that, you want to take advantage of it. And we have the Russell. Russell again breaking down, as you can see. We had this big oversold bounce here for the last 2 days, and now we're starting to falter again. So that's not good, not a good sign. All right, we want to see the Russell start to break back up. Yes, we did take the downtrend out, but really by a hair, and now we close back down again. So we need to really get back above these areas here, 109, 110 and a half. Ultimately, I like to see, and it's going to take some time, get back above the 200. If we get back above the 200, then I think that all bets are off to the downside for a while in the Russell. Okay, let's just keep an eye on it though. Very weak though. And then of course we have lastly is the Qs. Qs broke back above it. Here's the 8 right there, and again no volume. So we have a nice bounce, but the bounce has not been confirmed because we have volume that is diminishing on every uptrend. Every day that the market popped. So keep an eye on the volume. Let's keep an eye on the Russell. Watch the bonds as well, and of course, the VIX has been really elevated. But I do think volatility is going to be here for a little bit. So keep an eye on that. And I like to see today if we can get a bounce and maybe some follow through into tomorrow. Then it's really gonna paint a better picture for us to see if this market is actually headed higher or is going to fail again and then sell off at least one more time. Okay? Hope everybody has a great day, and we'll speak to you tomorrow. Take care, everybody.